This is the most important discussion in the CMA exams or in the reality also. Means once you work in a company, of course, and then you have you have to do some day-to-day work, and based on that day-to-day work, this will help you in understanding that how audit department, audit people, what are their requirements, how they think, and if you can cooperate with them in a professional way, what is the professional way to cooperate? So it will enhance your managerial skills, communication and coordination, right? So let's start our discussion. I will start internal controls, risk and procedures for the controls. What are the broad topics? We have risk and control environment, control procedures and legal aspects of the internal controls. Before I start my detailed discussion, I will give you an idea what we are going to discuss today. In fact, there are two types of auditing in the world. One is called external auditing and the opposite is internal. And first of all, we should know what is auditing. Auditing is an inspection, is checking of, it can be for anything, it can be for financial purposes. And in companies, of course, we can have financial audit, non-financial audits, operational audit, environmental audit, quality audit, IT audit. These are all type of audits that we generally heard in the companies. But apparently there are two types of auditing. One is internal and out of us. First of all, when we do a business, the business will work or not, this is a business failure risk. Then your accountant will steal the money, this is a fraud risk. Then all entries are not completed, this is incompleteness risk. Transactions are not valid, means they are not complete, valid, accurate. We use one word, financial assertions, means testing like it should be completed. Someone put last year sales in this year's sales. So these are all the risks associated with the business. Now as a management, I'm talking about CEO, because putting systems in the company is the responsibility of CEO. Auditor is responsible to give his comment after testing, right? And the owners are making sure that the things are rightly placed. So he says that every organization faces risk, that is unforeseen obstacle to the pursuit of its objective. And we have risk assessment as a process where management identify the organizational risk or vulnerabilities. Vulnerabilities means the dangerousness or the changes, fluctuations, these are all. Always when you put internal control system, what is internal control system? That is, it starts well before when the employee will reach to office. So you will tell him, look, this is the attendance machine, you have to punch your card. This is the way to sit, this is the end of service, this is the salary, this is the benefit, this is the decorum, this is the norm, this is the policy, this is the procedure. You have to do, this is all internal controls. So it involves trade-off between cost and benefit. What is cost and benefit? It's more into, suppose if we are going to find an evidence which will cost us to find $500, right? Cost. But the invoice amount is $100. So do you think that for finding $100 accuracy, we should spend $500? No. It's an institute who offers CPA exams. Now, according to AICPA, they told that if you are going to calculate the risk, so there's a term called total risk, and this includes three risks inside. One is the inherent risk, one is the control risk, and one is the detection risk. What are these risks? I will tell you. The first is inherent risk. What is inherent risk? Inherent risk is by nature, by default. For example, I sell chemical products, and chemical, it's very easy to fire. But if I sell a software, no one can burn my software, right? So inherent risk of a fire is more in comparison with the software. So sometimes you work in an industry which is risky itself. For example, we have a company and it deals with foreign currency. So, when the employees get salaries at the end of the month, right, they rush to the foreign, the currency exchange shops and companies. Maybe at that night when they sleep, they have million of, say, dirhams with them, which they have to transfer here and there and deposit into the bank. So it's a big risk. Anyone can take money into, and any bad things can happen. So based on, but if you sell, as I told you, the softwares, no one will bring that money to you. It will be a direct transfer to bank, so it's more secure. So inherent risk, always every business has their own generics, issues. This is, the first risk. Second risk is control risk. Control risk means that in spite of having controls in your company, we say the organization control environment encompasses the attitudes and action of the board of directors. Means the owners, they will make a vision, they have a vision. Who is a good employee? Who is a bad employee, right? And then they will tell the CEO, this is what we want. If they tell CEO, I want guys work hard, means 7 days a week. So he has to make a policy, play around, do like this. But he knows because the board is saying that, and he has to execute, so he will execute, right? But if he has a message that employees should not work more than the prescribed hours and they should be given 2 days off, so he will make policy, everything according to. Some companies, they are very harsh to give NOC, no objection certificate when you need a new job. But how the control environment, of course, what kind of organization structure you're looking for, means centralized, decentralized, then what policies, reflects from. Policies reflects from the board of directors, thinking. And objectives, philosophy, integrity and ethical value, again a board, If the board believes sell and throw, someone comes, say them, we are not interested. Let them think bad about us. This is their message. If the message is no, customer should be happy, So you will see the way the telephone operator is going to pick the call is very sweet. She is going to greet you now. As requirements, we have ECAO, B as requirements. So as management, we should know that we are in compliance of. As CMA, it's very important for us because we are working next and we don't know what is SOX, what is SEC, what is PCAOB, what is US GAAP, what is this, what is that. So it has no sense for managerial skills, right? That's why this qualification is the best, and it gives you a lot of terms. And later, once you are coming to a position, you write in Google and you search more or you see more books. So it gets you more clear idea about the facts. Okay, let's continue with our discussion. When you go to an audit, you have 4 main approaches. One approach is the substantive procedure approach. What is that? It's also referred to as vouchering approach. Substantive means substance. Everything has substance, like this is a substance, anything which exists as physical substance. So for accounting terms, substantive testing is the testing of the vouchers, files, substance, whatever accounting substance we have, files, records, vouchers. This is one approach. This is, based on sampling, we do it. If you have 1,000 invoices, so you take 5%, 10%, you check it. This is one approach. The other approach is balance sheet approach. What is balance sheet? Assets, liabilities and equity. So what we do is, first of all, we start our work from assets, liabilities and equity. Then later we will see the expense and income, that is the income statement. Approach is to see the balance sheet and then go back to the respective things. Third approach is system-based approach. First of all, as an auditor, you go in a company and you see how effective their system is. So if and in system, the hot areas is inventory and cash, there are some systems you want to test. And risk-based is the same almost, that most risky area you will pick it first, right? And then later into. So there are 4 ways an auditor can work. One is the system, one is the risk, one is the detailed testing, and one is the balance sheet